Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, we're going to be talking about 5 high quality dividend paying stocks that are fast dividend growers with a dividend yield close to 3% or more. Let's get into it. Our very first pick is the Toronto Dominion Bank with ticker symbol TD. It is a financial sector company with $129 billion in market capitalization, making it a mega cap size business. From a volatility perspective for Toronto Dominion Bank stock, it has a beta score of 0.66, which suggests less volatility than overall stock market. Overall, it's a low volatility stock. It does appear to be reasonable value at this time, and it has a dividend yield of 3.88%. As for its price to earnings ratio, Toronto Dominion Bank is showing a PE ratio of 10.7, which is in line with its own 5-year average. And it has a dividend safety score of 80, marking it as a safe dividend payer at this time. It's worthwhile mentioning that the last time TD increased its dividend goes back to December of 2021, where it increased it by 13%, making it a very fast dividend growth at that time. And similarly, for the past 5 years, annualized, they have been increasing their dividend 8% as a fast dividend growth. They have been paying their dividend uninterrupted for the past 27 years, and in the 11 past years of which they have increased it year after year. TD does pay its dividend quarterly in the months of January, April, July, and October. It is available for investors through New York Stock Exchange, but for Canadian investors, it is also available on Toronto Stock Exchange. As for the past performance of TD, it is worthwhile mentioning that the 1-year return for Toronto Dominion Bank is fairly stagnant at negative 0.4%. But the past 5 years return for the stock is showing to be upwards of 45%. And in the past 10 years, the stock is showing to be having a return of cumulative 85.5%. Now, our second pick is another financial sector company with ticker symbol PFG, Principal Financial. It has a market cap of $16.8 billion, making it a large cap business. From a volatility perspective, it has a beta of 1.12, which indicates it's a high volatility stock. As for dividend yield, it has a dividend yield of 3.86%. Its price to earnings ratio currently is at 9.7, which is in line with its own 5-year average, and has a dividend safety score of 72, marking it as a safe dividend payer. In terms of the dividend growth, in the past year as well as the past 5 years, they have been increasing it 9% annualized. As for their dividend payment history, Principal Financial has been paying its dividend since 13 years ago uninterrupted, and in all of those years, they have increased it year after year. They do pay their dividend quarterly in the months of March, June, September, and December. Looking at the past performance of PFG, Principal Financial Group, which is available on NASDAQ, the 1-year return for the stock is at 3% positive, 5-year return of 1.2%, and 10-year return of 161% plus. Just incredible return for the stock in the 10-year time horizon. Our third pick is a healthcare business with ticker symbol AMGN. It's Amgen Pharmaceutical. It has a market cap of $128 billion, which makes it a mega cap size business. The stock has a very low volatility of only 0.37 at its beta, suggesting a lot less volatility than the overall stock market. It is considered to be undervalued at this time and has a dividend yield of 3.23%. From a price to earnings ratio, it is showing a result of 13.6 ratio, and it is in line with its own 5-year average. The dividend safety score for Amgen is at 74, marking it a safe dividend payer at this time. Amgen has been increasing its dividend in the past year, in December of 2021, by 10%, which was a fast dividend growth. And in the past 5 years, they have been increasing it annually by 12% on average, which is a very fast dividend growth. They have been paying their dividend uninterrupted for the past 10 years. And in all of those years, they have increased it year after year. Amgen does pay its dividend quarterly in the months of March, June, September, and December. Looking at the past performance of Amgen stock, the 1-year return for this stock is negative 1.9%, 5-year return of close to 46%, and 10-year return of an incredible 236.7%. Just remarkable 10-year cumulative return. Our fourth pick is a company in consumer staples sector, J.M. Smucker, ticker symbol SJM. It has a market cap of $13.9 billion, making it a large cap business. It has a very low volatility in terms of its stock price at only 0.10 beta. It does look reasonably valued at this time and has a dividend yield of 3.08%. From a price to earnings ratio for J.M. Smucker, it is showing 15.9, which is above its own 5-year average, but it is showing a very safe dividend score of 96. J.M. Smucker last increased its dividend in July of 2021, which could suggest an upcoming potential increase in its dividend very soon. Last time they increased it, it was increased by 10%. In the past 5 years, though, on average, they've increased it by 6%, which is an average growth there. J.M. Smucker has been paying its dividend uninterrupted for the past 29 years. And in the last 19 years of those, they've increased it year after year. J.M. Smucker does pay its dividend quarterly in the months of March, June, September, and December. As for the stock price return for the J.M. Smucker, the 1-year return for the stock price is negative 5.4%. 5-year stock return is fairly stagnant at a fraction of a positive gain at 0.13%, but the 10-year return is showing a nice cumulative return of almost 69.5%. Finally, our last pick here is another healthcare company, BristolMyers, ticker symbol BMY, with a market cap of $160 billion, making it a mega cap size business. It again has a very low volatility, which is perfect for dividend investors that are seeking low volatility in the stock price. It has a beta of only 0.28. It does appear to be reasonable value at this time and has a dividend yield of almost 3%, to be exact, at 2.88% at this time. It has a price to earnings ratio of 9.7, which is in line with its own 5-year average, and has a dividend safety score of 79, marking it a safe dividend payer. The past dividend growth for BristolMyers goes back to December of 2021, where they increased it by 10%. And in the past 5 years, on average, they've increased it 6% per year. As for the history of their dividend growth and dividend payment, BristolMyers has been increasing its dividend year after year for the past 15 years, but they have been paying their dividend uninterrupted for the past 31 years. They do pay their dividend quarterly in the months of February, May, August, and November. Looking at the past performance of BristolMyers, it is worthwhile mentioning that the 1-year return for them is at positive 11.5% approximately, 5-year return of 38.5% approximately, and 10-year cumulative return of 119%. Just incredible. Well, there you have it, folks. A quick look into 5 high-quality dividend-paying stocks that are considered to be fast dividend growers, and they have amazing cumulative returns over the long span of time, as you noticed over the past 10 years. While we encourage you to do your own research before buying any stocks, it was worthwhile mentioning that the basket of these 5 stocks allows dividend investors to effectively gather dividends and collect dividends every single month, given that their quarterly dividend payments for each one of these stocks fall on different months of the year. If you found this video beneficial, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in the dividend stocks, growth stocks, and penny stocks. We also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.